Hi, I'm making this video to talk about AMC stock. Today was an important day because people were looking for the short interest report to see how much of shares were being shorted for both AMC and GME to get an idea if there could be another short squeeze or a second one. I'm making this video because based on what I've seen, um, likely, and this isn't trading advice, it's I don't think there's going to be a squeeze that's going to kind of parallel what we saw earlier in the past couple weeks, because a lot of that's driven by momentum and people jumping in who weren't previously interested. I've seen YouTube videos on Meet Kevin, kind of describing also that kind of phenomenon where on Wall Street Bets, I think they started out with about 2 million subscribers in January, climbed up to around 8 million. Recently, it's up to 8.8, but that growth on per day was just increasing so quickly. And there was also that freeze on buying with Robinhood and some of the other stock brokerage firms like TD Ameritrade. So that kind of really halted the momentum, obviously. And there's all those theories as to whether that was an insider job to protect organizations like Melvin Capital or Citadel. And Robinhood put to claim that it was a capital requirements need. In terms of capital requirements, some of the stuff that you see in terms of financial institutions and banking, a lot of that is directed in something called Basel, which is kind of the framework of financial institutions and their guidance for risks, in terms of how leveraged they can be in terms of credit portfolio and market-wide risk assessment. And basically, there's a whole kind of a set of documents about how much capital requirements banks should have for different levels of risk taking. I What they said in the interview of Vlad, the CEO of Robinhood, with his interview with Meet Kevin, the YouTuber, that this specific equation isn't published so that it can't be susceptible to manipulation. And that seemed kind of like a factual statement, not necessarily defending what Robinhood did, absolutely not. It did completely change the trending cycle of the markets, and it also kind of, I guess the main thing to ask is, so is the ultimate goal, I guess in that case, was that the price was driving up too quickly to bear all the risk from people betting on options, margin trading, or whatever else. And if that increased any more, the fallout would be too great if that thing came crashing down. So in a way, it kind of got artificially crashed by never reaching what its peak value would have been, which may have been close to 1,000, if it hadn't been slighted in the way it was. Especially with the media, the government getting involved, the government also kind of making people concerned about investing, given some of the rhetoric that was coming out from the White House with investigations mostly pertaining towards Redditors and people grouping together to invest in the stock. So it became really increasingly risky there. But also, so here's the main point here. The main outlook for AMC as a long-term stock investment, and I think it's not so bad. I think the outlook, and I kind of fell into this kind of bag holding scenario with a lot of others here. I have some GME shares. I have quite a bit more AMC shares, and those averaged out around, for AMC, probably around $13 per share, somewhere around there. Things kind of got messed up with my initial investment, where I think it was so volatile that day, where I placed a market order around 14, but somehow I got bought in at 16. But I completely remember when I put in a market order. Maybe I should put in a limit order, but I think it was just trending so quickly that maybe I just hit, it was the needle was moving so fast up and down that somehow put me in at 16. But then I guess you'd say averaged in or bought back in later at later points. So I'm about averaged in around 13. Um, but aside from that, maybe a little bit lower. But aside from that, in terms of long play, there are some positives in terms of a recent article, which is from Bazinga. This is something that actually came up last year, so this isn't kind of a new idea, but what was published last year was AMC had been talking with Amazon, actually held what it seemed like formal meetings about the possible acquisition for Amazon in a merger, similar to what perhaps Amazon did with Whole Foods. It looked like at points last year they were more interested in building up more capital when it came to brick and mortar. So they actually, we've seen Amazon Books. They transitioned into Whole Foods, so they were opening up kind of their own bookstores and also doing the Whole Foods play. But that was also kind of also part of their idea of wanting to be able to deliver groceries, and something that was becoming a market interest speculation for a lot of companies out there trying to. I think Blue Apron was one of them that got hit hardest by Amazon making that transition to Whole Foods. So a lot of companies were trying to look into what they could do with food delivery, and it definitely obviously spiked at the right time for them in terms of the pandemic, I guess, because now a lot of people are in the market for needing groceries delivered, and a lot of other companies, even Dollar Tree, I've seen is interested in doing some type of delivery service for goods. So in the long term, though, I think it makes so much sense with AMC and Amazon or Netflix. I think sort of this kind of goes back to an argument of like an iconic kind of image of what movie theaters represent, especially in kind of American history. I don't actually, I'd have to pull it up to see more information about the history of movie theaters, but I know that looking, obviously going back to some of the films, you think like Marilyn Monroe and, you had John Wayne and in the 60s, or classics with James Bond era stuff, and just the progress of the film industry. And I think really part of that image also relied on people going out to movie theaters and gathering to see films. And I don't think that's going to go away, kind of that image of Hollywood and people going out for films. I don't think it suits as well for, I know with kind of the pace of life, people want things to be streamed or recorded, and it makes sense to be able to do things from home too. But I don't see that replacing the theater experience for people sitting around a TV at home for a new movie release. I think it's going to lose a lot of the spectacle and awe. Some senses, people have said that Hollywood films have kind of dumbed down with, all the action sequences and the explosions, and kind of going for more for visual appeal instead of story. So that has been a criticism of how they kind of exploit the big screen kind of hype, where it just becomes kind of that kind of film. But I still think that a lot of those big budget films are more suited for that type of environment, where it does become a completely different experience when you go to the movie theater, especially with what they do, something like the IMAX theaters, when you have kind of like those seats that kind of rumble and you see those huge screens. So I don't think that's going to go away. And I think a company moving in like Amazon or Netflix, it's kind of a home run play for kind of looking for value in AMC, but it also makes total sense, especially if the company does continue to have a poor outlook. There's no reason for Amazon or Netflix to come in, and of course with Jeff Bezos no longer at the helm at Amazon, it's hard to know how aggressive they're going to continue to be to expand their kind of portfolio, or what the new position of the new CEO will be in terms of how they want to make decisions in that kind of how aggressively expansive they're going to be looking to be. But it definitely makes sense with something like Amazon Prime, if you can see movies at home I don't know exactly how the billing would work in terms of cost versus seeing at home versus the theaters, but maybe you could get like a 50% discount if you have Prime going to the theaters, or some type of discounts when it comes to the beverages at the theater. Um, so there's definitely, I think it totally makes sense. But of course, as a shareholder, it's not the most comfortable position to be in. Not necessarily just from a financial perspective, but also that it's good to kind of stay liquid and be able to make other moves in the stock market. You don't want to be like, I don't like the feeling of having my money locked into one stock, regardless of, even if I think it's going to make a comeback around the $20 to $30 range per share. It's hard to exactly pinpoint when that would happen. Maybe hopefully by the end of this year, that's something that's possible. But it's also kind of frustrating to know, it could be something farther off. There's still so much energy, so much trading volume involved in GME and AMC. Even on the Fidelity charts, it's still the top two stocks in terms of trading volume for buys and sells. So there's still a lot of potential there where a lot of people are still talking about it, still trading information about it on YouTube and Wall Street Bets. A lot of people are still really interested in this story. So I think that's one kind of ignition point that's not going to slow things down and make it kind of disappear. Even though it seems like the media's kind of made that their agenda, for some places, is to try to put it on the back burner or try to avoid either, continue to show how it's kind of like it's a long gone story that it's going to continue sinking and crashing, that they're just going to project that negative outlook. But I think that's far from the full picture here. I think there's still a lot of potential out there for GME, AMC. I think even GME, I think just in terms of its market capitalization, in terms of its, I'm gonna pull up my Apple ticker here. It's actually one of my favorite places just to look at stocks. I'm gonna should have it in the video on the live view. This isn't actually nearly how many stocks I actually have on my phone. This is just on the computer. It didn't completely link up with what I have on my phone, where I have like I'm tracking maybe close to 100 companies now on my phone, but I've got some here, some of the ones I'm looking at for sure. And I just added Roku actually, so this is one I don't have on my phone yet. But we have obviously AMC at $1.86 billion market cap right now. GameStop at $3.5 billion. And obviously these things vary so much in range. I mean, you can look at Starbucks at 125 billion. Tesla's almost there at becoming that $1 trillion company. So you obviously have to go within industry to make a sound comparison, because once you go cross industry, it's harder to compare. But we have Netflix here at 247 billion. And I just think that in terms of a brand value, in terms of what GameStop can be, it shows you kind of how much growth potential there is. I mean, you have to look at kind of the front of the pack here in terms of seeing where the potential lies. So, there's so much room for growth for these companies. They're kind of like near the bottom and out when it comes to major company brands. Of course, they've been on the decline for years in terms of what they provide as a business, in terms of connecting with more modern business approaches. So I think GameStop is pretty low value. I mean, the dollars per share value is 50, so that's kind of high, but I mean, that's why stocks split their shares, 4-to-1 split or 5-to-1 split once they start to get up there in the few hundreds. So anyway, I feel pretty good about these stocks still, and I wanted to make this video because there's a lot of content out there, but I felt like I could contribute something else, another point of view, and I think there isn't enough out there to match with the volume of interest there is in these types of stocks right now. So I want to add what I thought might be some valuable information from my perspective.